What's going on, guys? This is your boy Trillionaire Mac. Welcome back to another video. So in this video, I'm going to be breaking down a EURJPY trade that we took a couple of weeks ago within the Telegram community. It was around the date of January 13th is when our entry took place, and it gave us about 9.54% return, only risking 1% of our account. Sorry about that if you guys heard that Instagram notification. My apologies. But yeah, so back to what I was saying, we risked around 1% of our account, 12.5 pips as the stop loss, and our gain was about 9.54%, about 119 pips on EURJPY. So not bad at all. This is 95% of an FTMO account challenge or any funding challenge passed, which is absolutely fantastic. Within the Telegram community, this is exactly how we trade, and I show you guys literally what point of interest I'm playing from, and I give you guys an entry schematic to look for. So now we are going to break this down just a little bit. We're going to go to the lower time frames once we go over the higher time frame, and we're going to explain the entry and look at the outcome and why this was my target, things like that. All right. If you're not subscribed to the YouTube channel, feel free to subscribe. Every week I release videos regarding my points of interest and where I'm looking the market to reject from or gravitate towards. Now, so far, based on last week and this week, we haven't had, a lot of trades take place just yet, but I want you guys to remember this is only the 4th week in January, all right? We are still fresh as it relates to the institutions coming back into the market and things like that, and this is still first quarter. Now, as we continue to move into the year, as we continue to move towards second quarter and things like that, the markets will pick up and we will be day trading on a daily basis once again, but right now, not really day trading. I'll go over a Euro USD day trade. I'll drop it for you guys and like what I was thinking and things like that. But as of right now, we're just paying attention to the higher time frames, taking advantage of these swing trades. All right. So with that being said, if you're not subscribed to the YouTube channel, feel free to subscribe. If you have not liked this video already, feel free to like. And I do have a question for you guys. Which chart colors do you guys like better? Do you guys like this better? All right, how the charts are now, or do you guys like this here? All right, please let me know. Let me know which ones you guys like better. I would really love you all's input. So feel free to drop in the comments. Do you like the red and blue, or do you like the gray and white schematic? All right, let me know. All right, with that being said, I'll catch you guys. Let's go ahead and get into the video. All right, so if we're looking at the H4 time frame, essentially the first thing I'm always going to do, most of the time, is I'm going to be tracking structure. So if we just start from here and we look at this break of structure here, we can see we have this higher low, higher high, higher low, right? And then I'm just going to mark up structure for you guys based on how I would look at it. All right, because this did not close a bearish candlestick below, this is just essentially a sweep of liquidity, okay? So just tested higher low, higher high, higher low, higher high. So we can see within this entire region here, price is within an uptrend, right? That's very, very clear to see. We don't really have to think about it too much. We can clearly see that price is within uptrend structure. Then what happens? Then once price taps into this region here, I think we tapped into something based on the higher time frame, but I really don't want to mess up my replay, so I'm just going to leave it where it is. But I believe we tapped into something on the higher time frame, maybe on the daily or the weekly or even the monthly. You guys can look at those time frames and see. But we had a change of momentum within the market, right? So price went from being bullish, tapping into something, and then we started to create possible bearish structure. Now, I want you guys to realize the first lower high that forms is, of course, our first entry opportunity to take a trade, but it's not confirmed until we see price create a new lower low and then a second piece of structure being that lower high. That is going to confirm that price has now transitioned from an uptrend to a downtrend. So once price tapped down here, I told you guys we were going to look for sells to take place once price tapped into this region. On the M15 time frame, we barely tapped into this region, but I'm not going to consider it as mitigated unless price trades at least 50%. Okay, that is my rule for how I look for my mitigations. I do not consider a zone being mitigated unless price trades, closer to that 50% range. So once price tapped into this region, we did not get an entry schematic within the Telegram community, and then price pushed to the downside, creating this lower low. Right? So essentially, what I was thinking in this case is, okay, since price did not trade at least 50%, more than likely we were going to use this as inducement for price to run higher into this zone. And if you guys go back within the Telegram community, all right, once price pushed to the downside here, I did give you guys that analysis, which is why, we were able to take advantage of this. So after that, price pushes back to the upside. I'm still going to consider this as a lower high, just for the main fact that we swept liquidity above this region, and then you can see that price was bearish right after, right? So if anything, this can be tested highs, okay? But I'm not looking, because this is a sweep of liquidity, I'm not looking for bullish structure to take place, right? Because this area here is still being respected. Now, if this area here was broken, okay, with a nice sweep to the upside, then we would look for possible buys down here, but that did not take place. Therefore, this is a weak high, okay? And this is, this is a strong high. Let me go ahead and mark this up for you guys. So this right here is a strong high, right? And it's a strong high because it was responsible for giving us a break of structure. Well, a change of momentum, break of structure, right? Signifying that whoever came into the market within this area, and let's go ahead and delete some of these. Whoever came into the market within this area is more than likely going to protect their positions once price comes back to this range. Okay, that is essentially what we're playing on. Now, this here is a weak low, because and for those of you who have watched my strong high, strong low, weak high, weak low YouTube video, you guys already know this information, but for anyone who hasn't, I'm just going to break this down for you guys. So this is a weak low because it is not responsible for a break of structure. So we have no break of structure, and we have no change of momentum. Okay, now that change of momentum is really not important, okay? But for the main fact that we have not broken structure to the upside, that is what's really important. All right, for a strong high, you don't really need a change of momentum. That just adds confluence. But as long as you have a break of structure trend that is stemming from that strong high, that is what's going to signify a strong high. All right, so this here, weak low, price pushes back into this region. Okay, and now it's time for us to look for a possible entry. All right, so let's go to the M15 time frame and look for that. All right, so now that we're on the M15 time frame, let's look to see what price has done. Now, EURJPY is going to be one of those pairs that don't necessarily give the best entries and the best entry schematics, but you have to understand the personality of the pair that you're dealing with and go from there. All right, so understanding the pair that I'm dealing with as it relates to EURJPY, I'm also going to show you guys another similar example of this entry on EURJPY. This is not how it normally looks on other pairs, but EURJPY, for some reason, this is how the entries look. And, it's not the best thing in the world. It's not the worst thing in the world, but we simply just have to trade what price is giving us. So in this case here, okay, we can see that price sweeps this liquidity with this nice push to the upside, tapping 50% into our zone. That is exactly what we wanted to see, using this area as a sweep of liquidity, okay, with this nice push to the upside. And then finally, we have a break to the downside and a change of momentum as it relates to M15 structure. So why is this a change of momentum? Well, simply because we can see that price is within an uptrend this entire area, right? We're creating higher highs, higher lows, higher highs, higher lows. And essentially, once price taps into this region here, okay, we then break to the downside, taking out this previous higher low that has formed before price tapped into this zone. So once that higher low was taken out with this nice push to the downside, creating this lower low, you then had two entry opportunities. Now, anytime I have a sharp push from the upside, usually I'm going to take a supply and demand flip. Okay, for those of you who don't know what supply and demand flips are, feel free to check out my previous content because I talk about supply and demand flips within my supply and demand video, part 1, part 2, part 3, and part 4. So feel free to go check that out. Supply and demand flips are very, very simple and very, very straightforward to understand. If you guys want an updated video, feel free to drop it in the comments. If I have one person drop in the comments that you want an updated supply and demand video about supply and demand flips, I will be more than willing to make that for you. But it's essentially supply flipping demand or demand flipping supply, right? So usually whenever you have a supply and demand flip, you're taking advantage of the decisional. Okay, but anytime you have a nice run to the upside and a nice rejection, usually that means that you're going to take advantage of the decisional. Now, in this case with EURJPY, it decided to go to the apex, which is why EURJPY does not always give the best entry schematics. Like for example, this entry schematic here would have been better based on a lower time frame for this counter trend, right? But this entry here, based on pro trend, it was terrible. It wasn't the best, okay? But you were still able to take advantage of it. And what do I mean by it's not the best? What I mean is it's not giving a textbook setup as an entry. Okay, so for those of you who are a part of the Telegram community, or if you are a student of mine or a part of the mentorship program, you understand what a textbook setup looks like. You understand as it relates to live trading what a textbook setup looks like. Backtesting, you know what a textbook setup looks like. And this here is not necessarily that, but you can still take advantage of the concepts even if it's not a textbook setup. All right, it just takes a little bit more energy, effort to do so. All right, so if we're looking at this region here, we can see that price trades into the apex. Essentially, this is where the supply came into the market in order to push price to the downside to even consider taking out this demand here. Okay, this here would be the supply and demand flip. As we can see, it wasn't respected, created a failed reaction, then took it out. Price traded back into this region and then continued to pump to the upside. So price decided to trade back into the apex, which was right here, based on how I refine my zones. Okay, students of mine, you guys understand exactly how I did that. But if you don't, feel free to check out the course or just check out the link for the course and check out what type of information you're actually going to learn. All right. Price taps into this region. Okay, my original risk was around 12.3 pips, but you guys know I like to round off my numbers to either half numbers or whole numbers. So in this case, we rounded to about 12.5, and then we look to take profit down here at this week low. Okay, anytime you guys have a strong high, you should be selling at that strong high. Okay, let's actually write this out for you all. All right, so when are we looking for sells? You're looking for sells at strong highs, and you're going to look for sell targets at weak lows. Anytime you are buying, you're going to look for buys at strong lows. So essentially lows that were responsible for breaking structure. And you're going to look for buy targets. Ooh, sorry about that, guys. At weak highs. Okay, that is essentially what and how my trading style picks the buy opportunities, sell opportunities, and targets for those buy and sell opportunities. All right, very, very simple. So based on the higher time frame, if we understand that we have this week low here, based on the fact that we have an entry here, okay, so we weren't able to break above the previous high, which was over there, that means that we're going to easily target this region right here. Okay, so we risked 1% of our account on this setup, and of course it produced 9.54%. I really only look at percentage returns. I hardly ever look at pips and stop loss size, but I know you guys like to hear and see those things, so there you go. 12.5 pips, 419 pips. Very, very straightforward. Now, we can break this down to the lower time frame and look for our lower time frame entry. All right, but that's going to be, should we do that? Let's do that. Okay, so we'll leave this on the higher time frame, and let's go ahead and break down our lower time frame entry for you all. So price pulls into this zone here. Okay, absolutely beautiful, and sweeps liquidity here, instigated equal highs, tapped into our higher time frame supply that was responsible for breaking our higher or M15 demand here, right? And then we're essentially looking for price to return to the supply that is responsible for flipping this demand here and giving us a change of momentum. So let's click on this. Okay, so essentially that takes place at this decisional, which is here. Okay, now it's not always going to be this clean and clear, especially how you guys see it now. Let's delete this. Okay, we can leave it actually. So it's not going to be as clear as you guys see here now. This is essentially what I was waiting on the M15 time frame, but once price tapped into this region and started to push to the downside, this was an excellent opportunity for us to actually take advantage of a lower time frame entry on Euro. So my risk on this trade, if we're entering based off of this candle here, which was barely tapped, 7.3, So we're going to, hold on, let's place that right here at the very top, 7.6. So we're going to round that up to about 8 pips. There we go. Okay. So entry was based on this candle here. Price barely tapped into that region, and risk was about 8 pips. It was around 7.8 to this point here, but we increased it because you guys know I like round numbers. And our target was simply just based on the same type of higher time frame model, right? We're targeting our week low, which is here. All right, so that produced, if you are a student of mine and you understand how to trade the lower time frames right along with me, then that produced you about 13.92%, which is a completed FTMO challenge, just waiting on these valid setups to take place. Okay, now back to what we were saying on the M15 time frame. Now that we've broken down the M15 entry as well as the M1 entry, you guys can really see what can be produced with the trading style that I participate in and the trading style that I teach. Let's go over this entry model here on a different example on EURJPY. All right, my apologies if this video is a little long, but I want you guys to see this. So you guys see how this model right here looks very similar to this model here, except this model did not close inefficient pricing, which was here. Instead, it decided to come to our flip zone, okay, which I'm going to teach you guys again if you guys want to see that. Essentially, this here was our flip zone. Okay, essentially, this is the demand that came into the market within that candle that was responsible for taking out this supply here. Price trades back into that and then sells. So you see how, with EURJPY, it's not very consistent at all. Like, at all. Now, these two models look very, very similar as it relates to, so this risk on this should have been 13 pips. There we go. And then we would have targeted this to be our first target, being a week low, and that would have been around 6.32%. So as you guys can see, very, very similar entry models, but it's not consistent. This returned to the apex, didn't leave any inefficiency. This did not return to the apex, left all of this inefficiency. Also, price came back, traded 50% of this zone, but with this here, did not trade 50% of this zone, which means price can definitely trade a little higher if it wants and tap into this zone again. So that is what I mean when I say the entry models are not consistent. But you can still take advantage of EURJPY, especially if you join the Telegram community and you're a part of the daily market outlook. So every single day, sometimes live, every single day, I send you guys like 15 to 20 minutes of me breaking down all the assets that I trade based on the concepts that I teach within my course. I don't do too much teaching, but I definitely, you guys should definitely understand where the market is going. Like for example, we predicted this move here. I told you guys more likely we would sweep liquidity to the upside, taking out these instigated equal highs, and then price would break to the downside, leaving us with a point of interest. And that's exactly what we have here. I'll be looking for price to trade back up into this region, and then everyone within the Telegram community, you guys are going to receive a certain notification when that happens to possibly take sells. We're also going to keep our eye on this range right up here as well, just in case price does want to return to that area. And I want you guys to make sure you're paying attention to it as well. All right. So with that being said, I'll catch you guys on the next one. I know this video was a little longer than usual, but I just wanted to explain all of these entries to you. So lower time frame 13.92%, higher time frame 9.53 or 9.54%. Very, very excellent trades, very good risk to reward, absolutely beautiful. So I'll catch you guys on the next one. Much love. Peace out.